So what I really wanted to do is kind of talk about the non-farm payroll. This drop a 2 in the chat if you understand what the non-farm payroll is, and drop a 1 if you don't. And if you don't drop anything, no one will ever know if you know or don't know. But this is your learning opportunity. So if you don't know, drop a 1. And if you do know, drop a deuce. You can't drop 1 and a 2, man. So
I mean, like, I know facts about NFP, but I feel like I can always learn more.
But what are the facts? What are the facts that you know?
NFP stands for non-farm payroll. It's the first Friday of the month.
So okay, all right, that's perfect.
Okay.
Somebody else chime in. Alicia, it's non-farm payroll. It's the first Friday of every month. Can you add to that?
No, that's about all I know.
Michelle?
I mean, other than what everyone else is saying, that's my understanding as well.
Prince? Prince, you didn't drop nothing, but I see you, man. I see you in the back.
That's the same as mine too.
Okay, y'all, let's talk about non-farm payroll. What does that mean? Non-farm payroll. That means if you don't work on a farm, it's you, right? So there's surveys out there, or they get the information from somewhere. I don't know exactly where they get it from, but it's a measure of jobs that are out there, and if the vacant jobs, right? So if you look at the non-farm payroll number, they expect it to be a certain level. I think they expected it to be 263,000, right? And it ended up being 320,000. So that just means that they have more people on the payroll than they expected. The economy is stronger than they expected. All right. That's what. Yes, sir.
Would that be equivalent just for like America to the unemployment rate?
Yeah, it measures the unemployment. It measures how many people are working.
But it's global.
No. This is just America. Every country has their own measuring stick. Like, all of us have the same reports. That's why when you see the FOMC meetings, y'all know what the FOMC meeting is? It's the free market committee, the free open market committee, right? And they talk about the economy. They talk about the money policy. They set the interest rates. So every country has their free market, free open market committee. They may not call it that, but they have their financial minutes, and they decide what they're going to do with their currency, whether they're going to raise the interest rates or lower the interest rates. But the more you know about these events and these reports, the better prepared you are to actually trade these events. Especially when you're paying attention to them as they come out. You don't just say, "Hey, man, there's a red folder." No, what is the red folder? What are they talking about? Because if you have knowledge of what they're talking about, then you can anticipate the trade coming out. Okay, so the non-farm payroll numbers, right? It measures the employment, here in the United States. With them raising the interest rates the way that they've been raising them, everybody's talking about that hurting the economy, right? That driving us into a recession. Eventually, you will see companies start to lay people off. And that's when you can start, you actually see the results of the damage that the high interest rates cause to the economy. Does everybody understand that? I don't want to lose people. I'm trying to connect these dots. So if you raise the interest rates too high, it makes it too expensive for companies to borrow money. Most companies need to borrow money in order to make money, right? So if the interest rates go too high, they have to start laying people off, right?
Hey, Ty, what was the interest rate before COVID?
Um,
And are we somewhere in there? Are we still under? We're still under that, right?
I think we're under it. I don't know exactly what it was before they started dropping it, but we dropped it to zero pretty much.
Right.
And we
So
held
why,
it.
why you think they complaining already with the?
Well, it's all relative. You have to understand that before COVID, there was some sort of balance, right? Like money was still being printed, and people get pissed off. Money was being printed because we've been at war for over 20 years. Think about that. The U.S. has been at war since the towers came down, man.
Hey, let me jump in just real quick. We've essentially been at zero since 2008, that last Great Recession. That's why the stock market has exploded, because and the price of housing has exploded because you print money and you hold interest rates down. The price of real assets explodes because you got to think of it like if you go to some poor African country or to Venezuela or someplace and it costs, 2 billion pesos to buy a Dr. Pepper. If you go back 30 or 40 years, it didn't cost 2 billion pesos, but they inflated the currency. So now it does. And it's the same thing. It's why, 2 years ago, a house that cost $200,000, it might cost you 450 or 5 today because we printed money. So
Exactly.
the price of real assets doesn't change because you print money. It gets more expensive or it looks more expensive. But go ahead.
Yeah. So but that's why food and gas and everything has went way up. It's a result of us just printing this money, and we've printed money. I remember back when George Bush was in office, and we printed all that money. We didn't even count the war, like in the budget. We didn't even include the war in the budget. You know how you balance the budget every year, and then they'll have an argument when they stop paying government workers. Y'all government workers, y'all know what I'm talking about, right? In 2012, I had a government job, and right when I retired from the Army, and they shut down the government. I worked for an agency that made our own money, so it really didn't affect us. It would have if they had shut it down for much longer. But when y'all hear the news and I'm talking about, Congress and the White House can't agree on a budget, so we're gonna have a government shutdown. That's what they're talking about. Like you have to balance the books. It's like it's like balancing your personal finances every month. They have to do it every year, in the government. So at some point, they just stop including the war numbers. Now it costs billions of dollars to go to war. You got to pay the other government. You got to fund the troops. You got to send equipment. You got to keep buying equipment and ammunition and weapons. So that stuff is super expensive. And we just stopped including that, in the budget. And we're printing all this money. So now we're starting to see where the chicken has come home to roost. And like, this is going to be our kids' problem. We're not going to feel the real effects, but they will, nobody even knows how much money we printed during the pandemic. It's just a printing press. So now they got to start taking some of that money out of circulation, so they raise the interest rates. This is going to be a painful process. Just how it works. If you depend on a regular job, just understand that you know, your regular job is probably not going to meet all of the needs, you know, going into the future. Or if they do, it's going to be very tight. You know, they raise minimum wage, they raise pay. Well, that's cool. They raise pay, but you can see inflation is 8.6%. They didn't raise it 8.6%. And they're not going to continue to raise it, you know, 8% or whatever in the future. So it doesn't really matter, you know, they can rate, you can get paid more, but the bottom line is the price of goods and services is going to far outpace your the money you have coming in. So you have to understand that, and that's pretty much why we are trading, you know, trying to make a way, you know, for a better future. But if you understand the reports, and if you understand, you know, the things that are coming out, you know, in these meetings, that it'll set you up better, you know, as a trader. You can anticipate moves versus react to the market. Okay, so you're not scared to trade NFP week. So we knew it was NFP week, so we kind of stayed away from the dollar. We traded the JPY, you know, EJ and GJ in particular. You know, what I found is if you have your plan going into the week, then you follow your plan and you're good to go. You know, you don't jump around different currencies trying to catch, you know, these onesies, twosies move. Like you have your setups at the beginning of the week, you pick your pair out, you understand your move, you know what you're looking for, and you trade it. And you can make your percentage on that anticipated move. It's just worked a lot better for me doing it like this during this war situation than it, you know, in the past where you can just kind of see something and hop on it.
Hey, Todd.
Yes, sir.
Hey, just to make sure I'm squared away. So NFP week happened, the number came out higher than expected, which means there were more people unemployed than they expected.
It means there are more people employed. Non-farm payroll, they expected to be 265,000.
Okay.
Actually 325,000 on the non-farm payroll. That's 100 in what? 20? Well, actually not 100, but about 65, probably about 65,000 more people.
Gotcha.
Working.
And so that means the dollar responds which way, up or down?
It's going to be up, but let's talk about that though. So if more people are employed than they expected, what does that mean for the money people?
You mean companies and stuff?
Well, no, for the people setting the financial policy.
Oh, gotcha.
We're gonna have an FOMC meeting next week, I believe, right?
Does that mean that more people would be?
Does that mean what? Does that mean what?
Does that mean that more people would be spending?
Well, I think by nature, yes. I think, you know, that is correct. More people are going to be spending. But I'm asking for the people, for the Fed, you know, for the chairman of the Fed, what does that mean for him and the people who vote, who have a vote on how they're going to handle the inflation? So the initial fear was if you raise these interest rates, it's going to stall the economy out. People are going to lose their jobs and they're going to go into a recession, you know.
It means they think they're doing the right thing and they're going to stay the course and keep raising the rate.
That's correct. That's correct. So they raised the interest rates a historic level last month. We raised it 75 basis points. So you would think at some point you're going to see the slowdown. You're going to see more people unemployed than employed. But so they had an estimation out there and more people were employed than they thought, which makes them say, well, shoot, we can raise even more, right? This has to be a balancing act. They can't just raise, they can't just say, okay, we're gonna raise the interest rate 6%, right? They have to keep nudging it up. It's like if you're driving a car and you just fixed your hose on your radiator. You can't punch it, but you can go faster and faster until you see how much pressure this hose can take or whatever. They're doing the same thing. They're just amping up the pressure on the economy little by little. They raise the interest rates little by little until, you know, it starts to slow down, right? Once the economy starts to slow down, then they'll have to make the hard decisions. Like how high do we raise these interest rates before it becomes too high? So if you see the NFP numbers start to slow down or the unemployment rate start to creep up, that's when you know that the effects of interest rates hikes are coming into the picture. But until they see that, they got free range to just keep raising interest rates. Okay, so hopefully everybody has a clearer picture of how that NFP goes hand in hand with the FOMC.
So you're also saying you at the next FOMC meeting, you expect them to raise it or just talk about how, hey, the NFP is better, so our anticipation is to still keep raising in the future?
Oh, they're gonna raise. They're gonna raise. So this is what I personally think. I think we might get another 75 basis point raise. It'll either be 50 or 75. It ain't gonna be no 25 basis point. And here's why I say that. They're very aggressive in trying to bring inflation down from the 8% range. Like nobody can afford 8%. So in order to bring that number down, like there should have never been a 25-point raise when we started raising. We raised it that first time 25 basis points and it did nothing. We should have came in there at 50 basis points. And each hike should have been 50s. So there's a understanding or an agreement out there between most of those Fed officials that we waited too long to start doing this. So they're trying to play catch up in raising these interest rates. And somewhere out there, you can probably Google it. I think most of them really wish that we could have had the interest rates up to about 6% by the end of the year. That's not going to happen, but we can have them at about 3% probably. We can have it at half of that by the end of the year, but we're going to have to keep raising, you know, the interest rates at probably 50 basis points in order to reach 3%. What are we at? 1.5% right now? If you raise it 75 basis points, let me check the rules. We're at 1.75%. So if we raise it 75 basis points, we will be at 250. We'll be at 250, which is pretty darn good. With it'll be with 5 months to go. That'll be August. So we raise it 50 basis points after that, we can get probably about 4.5%.
Hey Todd, NFP is every first Friday. When is FOMC? How often?
Let's say the second week. I think we kind of touched on that last. Is it the second week, y'all? Or the third week?
But it's monthly.
Yep. Mo.
So in normal times, this is a boring meeting that nobody pays attention to.
Oh,
or
that's
people
not true. That's not true.
I'm just asking.
No, it's still a high productivity meeting.
I mean, does it affect the markets as much?
Yeah, that's why people are always scared to trade it.
It does affect them. And like what I would say is, I think people know I'm not a fan of the pairs, and I'm not here to denigrate the pairs necessarily. But I know there's a direct correlation with the S&P, with the Dow, and with the NASDAQ. When those numbers say the economy is good, those indexes are going to go up. And when those numbers don't meet expectations, those indexes go down. So like he was saying, those numbers were better than expected yesterday. And if you paid attention really all week last week, because I think they knew ahead of time, but Friday, it traded up. It traded up all last week, but Friday it traded up. And if you look at, the order blocks on the chart, they're still bullish. So my guess is that they're going to go up, generally speaking, until they have one of those meetings and the numbers don't meet expectation. And probably as you see the bearish order blocks lining up, you shouldn't anticipate stuff, but I'm just starting to see.
I think you should anticipate. I mean, that's why you have an understanding of these meetings. You have to, the people who make the most money are the ones who anticipate. I mean, you understand the data. If you understand the data, you know why the markets are going up, right? Like we do expect UJ to start climbing this week. We expect the dollar to sizzle, like the dollar needs to be going up because everybody knows that we're going to get another significant rate hike. Like it's not even a question. So the dollar, everything should trend up. The dollar should be getting hot. Gold should be dropping. The Dow Joneses and stuff will push up. And I mean, I was going to talk about those charts too, but ICT in his 2022 free YouTube mentorship videos talked about the liquidity at the top of these charts, right? If you see all these areas, liquidity, price needs to go above here. Let me pull up the daily so we can see it better. See, there's liquidity here, liquidity here. The market is way down here. So I expect to see a run up to attack all of this liquidity. We'll probably get a couple of thousand points, eventually. This is 15, 16. I don't know if we get 3,000 points, but the liquidity on the way up will be attacked, right? So 1,000 points has been nothing lately. So I would expect for the market to run this upside liquidity before we get the hey, we're going to raise the interest rates another 75 basis points and it tanks this market. But that's anticipated, right? Like we would expect for that type of thing to happen. Even if you look at the charts and you see all these breaks of structure to the bottom side, price needs to go back to the order block that spots the break of structure before it falls. So even if it doesn't go way back up here, we have our liquidity points that we can look and see, and imbalances we can look and see, and we can get an idea of where we'd like to trade this market up to. And these are moves that we can trade and we can understand, okay? So we understand the reason behind the moves. So I do think we should be anticipating versus reacting, to these moves, because you have the information and you understand why the markets are pushing up.
Not to mention that 78.6 and the swing low down there too.
Well, of course. I mean, if you would have traded that, it would have put you in there perfectly. And me and you talked about that the other day. And it's funny that the news just kind of lines up to where the market does exactly what the paper says it should do, right? All of that stuff kind of works hand in hand. So even if you don't understand the fundamentals behind it, see, if you just trade the concept, you would have been in the house. But it's better when you understand the fundamentals behind it, you can anticipate the upside move. All right, do I have any more questions on the NFP? Does everybody have a better understanding?
Yeah, I do.
Okay, so Felicia asked a great question in the chat. When looking at FOMC on a Forex counter, what events tend to hold more weight? They all hold equal weight. Okay, what do I mean by that? Everybody is going to leak on the 14th. That whoever speaks, I don't know, he might be the Fed chair of Chicago, maybe Dallas, whatever, right? Whoever speaks, they're dropping tea leaves, right? And me and Sean, we used to laugh about this. You know, the Fed is in bed with Wall Street. So they're not, like back in the day, it used to be secret. They wasn't in bed with each other. So they keep secrets. But now they drop tea leaves. So they kind of let you know what's going on. So they're gonna speak and they're gonna say something like this. You know, the economy is still strong. Inflation is still too high. We're gonna do whatever it takes to aggressively tackle inflation. Translation, we're gonna raise the hell out of these rates. We're gonna raise 75 basis points. We're gonna raise high, right? And we call that hawkish speak. They're gonna be hawkish, right? Dovish means you know, the economy showing signs of weakness. We got to be careful about how we raise these rates. We don't want to trigger a recession. That's dovish speak. So when they drop those types of tea leaves, you as a trader have to understand, you have to interpret what they're saying, right? And when they're hawkish, that's good for the dollar. The dollar's going to go higher. When they're dovish, when they back off that strong talk about raising interest rates, the dollar is going to drop, right? So I don't know if you've ever traded FOMC or seen how the market reacts to FOMC, but it's going to react to what the speaker is saying, right? And in general, the Dow Jones and them are going to react you know, negative or conversely to the dollar. If the dollar goes up, the indices will go down. If the indices go up, the dollar will probably go down, because high interest rates is good for currency. It's not necessarily good for the commodities. And those are short-term moves. So, you know, it's not like it's going to move it forever, right? It's just going to be a short-term move. But when the FOMC meet and they drop those tea leaves, you have to kind of keep track of what they're saying, because each month could be something different. Then when the funds rate comes out, you already anticipate what's going to happen. So by the jobs report being strong, we can already anticipate, you know, as long as we get these numbers out of the jobs reports, we're about to raise the heck out of these interest rates. Okay.
That was for my people, Jason, what you endured. I mean,
Yep.
15 months in prison. You were convicted for espionage.
And now that's why you'll hear those financial people on those channels say the number one killer of a bull market is the raising of interest rates. It's always what kills the bull market, the raising of interest rates.
Hopefully everybody knows what a bull market is. Everybody. I don't want to insult anybody's intelligence.
Yes.
No, I'm serious, man. Like we don't know who's on the call and who's not been trading. Like you just don't know what you don't know.
Right.
Everybody understand the difference between a bull market and a bear market?
Until we effectively create some deterrent mechanisms, legal deterrent mechanisms, and come together with our international partners. Say, hey, this is
All right, so that's kind of what we can anticipate. So, I say all that to come to my next point, right? Terrence asked me this morning about the commitment of traders that ICT talks about and the interest rate. So before this war and the various events that we have that are acting as catalysts to move the market currently, before the war, and when everything was just ho hum, business as usual, you look at the interest rates, you go to the commitment of traders, you see where the institutions have their money, and you kind of piggyback with those guys. Now you can still use the commitment of traders report. It will show you where institutions have their money. But if you understand the news that comes out and understand how it affects the market, you don't necessarily have to use the commitment of traders in order to pick your trade setups. And here lately, I haven't really used the commitment of traders because of all the news that's been coming out, and my understanding of how to trade those different events. So I would encourage everybody to get involved with ICT, Inner Circle Trader, Michael Hudson. He's a little bit dry, but once you get past that piece, he will change your life as a trader. It's just some things that he can explain that you're not going to find in a lot of other places, and the concepts that he drops are they're the truth, right? So if you really want to learn I would really suggest that you take some me time, some personal time, and you seek out that information. All right. The commitment of traders is barcharts.com. Okay. I'm not going to go to it, but go to bar charts. You can look up your currencies. There's an overlay over here that will show you commitment of traders. And then once you tap into it, it will show you kind of where the banks are putting their money. Now,
Hey, Todd.
Yes, sir.
Since I just watched it, they can do that ICT Market Maker series. It's video 1. If they just want to learn about that commitment of traders, it's like between minute 10 and 15, somewhere in there.
Okay, so y'all got it from Terrence. Now, this Desiree says sometimes you need somebody to explain what ICT is explaining. I agree, but I think that as your understanding expands, then you won't necessarily need the explanation. But if you do have a question, just ask the question. We have an intelligent group of traders. Like we have some awesome traders in the group. We even have a robot guy in the group. I mean, I don't know of another community that you can get for FREE that has the breadth of knowledge that's in this group. And I'm not saying that because, oh, it's my group. I mean, first of all, it's not my group, a couple of my friends wanted to make this group and we did, and everybody came, it's just how it kind of happened. But the knowledge that is in the group and the learning that goes on in the group, to me, is perfect, right? You know, it's in an environment that I've always wanted to be in, and you know, we had to kind of create it. You know, whenever Ruby's group stopped providing what I thought I needed or what we thought we needed, right? And that's all right. You know, maybe eventually this group won't provide what everybody needs, and there'll be another group. You know, evolution is necessary. But the point is, if you never stop learning, if you always sit down and learn, eventually you're going to come around to that ICT video, and he's going to speak of the two fundamental drivers of the market, right? Interest rates being the fundamental driver of the market, but the commitment of traders is the second piece of that information that will help you determine what moves you want to make in the market, right? Whether you want to buy, what you want to buy, or what you want to sell. Okay. Now, the important piece to this is the information that you find on barchart.com is just one piece of information. You have to take that information along with, you got to piece it together with the information that you see on the world interest rate site, right? On global-rates.com, you have to kind of add it together. So you have to kind of have an understanding. You have to pair a strong currency up against a weak currency. And then you have to trade the strong currency. You have to buy the strong currency and sell the weak currency, right? So, you know, I don't want to sound like I'm talking in riddles, but if the JPY has a lower interest rate, if it's the weaker currency, you want to pair it up against a strong currency like the US dollar, and you want to buy the dollar. So if USD JPY is the currency, then you buy USD JPY because you anticipate it going up, because you understand that the dollar's interest rate is higher than the yen, right? And you know, maybe you expected to buy, so you pair it, you get that information and you buy it, right? And this is how you have your success rate super high, right? Back in the day, I used to just trade what I thought was going up, right? Or what I saw going, I'm reacting. Now that's not the case. I'll pick a currency based off of what happened this past week, or what I anticipate happening in the future, and I'll trade that currency, right? So that way you're not trading and you have these surprises. If you're trading the information that you know and you understand, the market will do exactly what you think it's going to do. And that puts you in the best situation as a trader because you have the advantage over the market. So if you don't understand what I'm talking about, just buy USD JPY because it's going up. It's going to retrace. You're going to have retraces in there. So anticipate the retraces, wait for it to retrace, hop in for the buy. Somebody asked me about GJ, Martha. Martha, you're always asking these off the wall questions about these pairs. And then when I give you the answer, you still don't trade it. We're going to talk about GJ. We'll talk about GJ. What happened with GJ, Martha? What happened with the British pound? Martha, are you still on the call? Anybody?
You want anybody to respond?
Yeah, maybe Martha got off the call. Anybody can respond.
Well, I mean, it started off the week with a weekly order block. I mean, a weekly bear order block. And it dropped 400 pips at least. And then what day was it? Thursday, Boris Johnson left and the price went back up. So
All right, for the people in the back, who is Boris Johnson?
I was sick about that missing that first weekly tap in because I was kept playing around trying to, I don't know, fake myself out.
All right, so this is what he's talking about. We were trading this. So we wanted price to come up to this line to tap us in. What do I mean by tap us in? All right, this is a order block up here. Here's the weekly order block. So in last week's meeting, we said we're going to trade GJ and EJ down. So we wanted this price to come up, tap us into the trade, and drop. And it did exactly that. It dropped 400 and some pips. Then old BJ, the prime minister, decided to quit. You know, I guess too many scandals and too much pressure. But when he quit, price went in the opposite direction, back up. And there were imbalances and whatnot that needed to be filled. So all of that was taken care of in the same week. So if you missed the 400 pips down, you could have caught the 400 pips up. So it's 800 pips that it gave us this week. If you missed this trade, that's on you because we called it out, man. We traded it. EJ dropped. You know, it didn't give us the same pip count, but it dropped exactly as anticipated. Now, none of us knew that old BJ was going to resign. So we didn't know we were going to get double the pips, but another 477 pips. Y'all should be eating, man. Like, these are the only two trades that you needed to take last week. You know, and I still had people hitting me up about off the wall pairs. And I don't understand. You know, I mean, I know everybody doesn't think like I do or trade like I do, and that's cool. I answer everybody's questions the best I can, but do yourself a favor, man, and pick your pairs at the beginning of the week. You know, if you pick the pair at the beginning of the week and you anticipate the move, you make your money for that week. And you're not stressed. We traded those two pair. Like we could have traded, like I think AU had an order block. A lot of the US dollars pairs had an order block, but it was NFP week. You know, I figured the dollar would be more tight. It wasn't. The dollar did exactly what the order block said it was going to do too. But in my personal experience, the dollar is always tight at the beginning of the week until the end of the week. So that's why I chose those other two. But I say all that just to say, if you prepare yourself on the weekend for your trade setups, then chances are you'll be more successful during the week because you're not looking for setups while you get hit in the face. You know, you just kind of wait for your setups to happen and you just trade them. And you get your percentage that you're trying to make or your dollar amount you're trying to make, and you get out the market. The less trades that you do, the more successful that you'll be in the market because you're not exposing yourself and your account to unnecessary risk. All right, I want to look at a few pairs. I think that the oil kind of rebounded last week. US all. Okay, so US oil was way down here last week. And you can see it pushed back up. But don't be fooled by them by the talking heads to tell you the oil is recovering, because you see that bearish order block. Y'all see that? See how it tapped my line? I ain't gonna even brag, y'all. I didn't trade it, man, because I'm scared of that US. Oh, man. Okay, this is the order block. And if you look at this daily candle, when this market pushed down, it left a huge imbalance from here to here. Now you see prices pushing up into that imbalance. I want to take the rest of this imbalance. I fell in love with the 2 hour chart. Okay. This is the wick above the order block. For those of you who've traded weekly order blocks, you'll know that it's not uncommon for price to push up into the wick of the order block. All I did was drop down to the 2 hour chart, find the imbalance in that wick. And if I go back to the weekly, this is what it looks like. This is the imbalance that's on the daily chart. So I personally think price is going to push way up here to the 109. As a matter of fact, I read something the other day that said price would go to 110, but I'm trusting what I see on this chart. So I think that price will probably get to 109. It'll be interesting to see. So if you trade US oil, there's a 1 to 5 aura, you know, and you know, if you trust your analysis, you can shrink this the stop loss. But oil is so volatile, man. You know, I really don't mess with it like that. So we're gonna see how it pans out. That's what I think. What do y'all want to see? What preferably a pair with a weekly order block. I don't want to waste my time with pairs that aren't order blocking.
Did you say all you were gonna say about our chef? Oh, there you go.
Well, you know, Chef, in my opinion, it's easy. You know, we missed a great opportunity because if you look at this weekly, it pushed up, it broke structure, it pulled back to the order block that broke structure perfectly. Bam, you're in the trade. Easy money.
You say we missed. Why you say we missed it? It just made a weekly low.
I just showed you. I just showed you. This is what I mean. You saw this break of structure, right? The price pushed up. We got a break of structure. This break of structure happened March 21st this year. You got the Wyckoff distribution. The market pushed all the way down. It tapped in to the same order block that caused this break. And it shoots back up. If you had anticipated this move,
When did it tap in?
June 27th.
When did we get the breaking structure? Back in March?
Yeah, listen, I know it was a long time ago, but it's a weekly chart. This is all I'm saying. If you anticipate these moves, it doesn't matter what chart you're on. It could be a monthly chart, it could be a weekly, it could be a daily, it could be a 1 minute, it could be a 5 minute, 15 minute. It's all the same. It's fractal. It's going to do the same thing on every chart.
Yeah, I'm not knocking. I agree with you. We missed a great opportunity, but it highlights the point that I harp on every week about watching paint dry. So, I mean, I think
that's why, look, right click alert.
pairs, you gotta set alarms or something that will remind you that when price approaches a certain area, you know, you got to have a reminder, because 3 months is a long time to be waiting on something to come back to the POI. But you're 100% right. I mean, I agree with you. A great opportunity was missed.
I agree, but look, check this out. Check it out, y'all. Check it out. This is July 4th. Y'all's Independence Day.
How many pips has it gone up so far?
Hold on, bro. Let's talk about this, bro. Y'all was drinking beer, partying with y'all's cousins and your drunk uncles.
Oh, swing low. We about to get another entry, baby.
Hold on, bro. Look at this. July 4th, this week, or you know, Monday, price shoots up. Tuesday, it bangs up, drops down to where? 78.6 to pick you up. But you wasn't at the bus stop. Y'all didn't want this free money. Y'all didn't want this paint to dry, Sean. Y'all didn't want that paint to dry. So you missed these 172 pips. Now, I'm not mad myself because I was trading GJ to get 800 pips, you know. But what I'm saying is, how many confirmations do you need to see? You see the weekly, you saw the tap in, right? This is a day chart that would have picked you right back up if you didn't anticipate the tap in, and now it pushes up. In my personal opinion, this is a weekly order block, so it's going to come back down, right? But where is it going to come down to? That's the question of the night. There's a daily order block, so wouldn't it be awesome if it just tapped our order block and came and picked us up at the what, 78.6? Oh, dang. Come on, man. So if I anticipated hitting this order block and picking us up at the 78.6, it would be somewhere in this area. Let me drop down to this 2-hour chart. That would be right around this area.
No, you got the order block.
78.6. 78.6 is here. So that would be this order block.
I got it to the order block at the bottom, or yeah.
You got it down here?
At what's 65813, 65813. Well, I'm looking at it on a 4-hour though. So
No, that's cool. 65. This is 65.96.
okay.
The price is now. There's an imbalance right there. Y'all see it?
Mm-hmm.
So if you GAN box this inbox, it'll probably be very close, Kim. Let me see. I like my analysis better than yours, so I'm gonna use mine.
Of course.
No. I'm joking with you. I need to make it bigger because I can't really see this wick. Jeez, man.
It's them little squiggly lines you got on there.
Put them glasses on, Todd.
No, it's this moving average.
Mm-hmm.
It's the first green candle, right? Why are you measuring that one?
I'm measuring the wick. I'm measuring this imbalance right here. From this wick to this wick.
I thought
Right.
the imbalance was the first wick.
Well, hold on, Terrence. It is.
It is, but then
The
it
price
came
pushed-
building.
Pushed in. So now I have to measure it from this wick to this wick. That's what's left, right?
Gotcha.
All right. That's 65.91. You said what, 65.85? What is it, 6 pips? It's 6 pips, 6 pips different. I like the way you think, Kim. I like the way you think. But if you look at it, that's gonna be probably the 78.6 from this move right here. It'd actually be the 61.8 from this move to this move that pulls back.
You don't think it's gonna go up a little more though before it comes back?
Well, it may, but you know,
Yeah.
I mean, you have to redo it if it goes up.
Mhm.
But
Well, it's
I think it could hit this daily order block, honestly,
Mm-hmm. I agree.
and then push down. So if it does, if you're gonna take this trade, you all know me, the best thing I'm doing is hedging. I'm gonna trade it down, then I'm gonna trade it up. Felicia, your analysis is playing out.
what Felicia said.
She had hers at 65.95.8, which means she was better than Kim.
Don't do that, Todd.
He get on
Kim
my
and I are
nerves.
cool. Don't play them games.
Felicia
on my
was just pointing
nerves.
out that she was better than Kim.
No, that's because
No,
you were
ju-
closer to. That's because you were closer to his analysis. That's why. I
Oh my
He's
God.
terrible.
Honestly, it doesn't matter. The point is, I mean, you understand what you're looking for, and that will line up with this daily order block with price coming back to tap into the daily order block. And if you think about it, in the past, we used to say, don't take the trade if it doesn't tap you in. And this is a prime example. If you had took this daily trade on Friday, right, and the market went up, and now all of a sudden it's going to double back and put you in a negative way down here because it's going back to tap in. So a lot of good stuff in this trade setup.
Hey, Todd,
Yes, sir.
can you explain your hedge?
Yeah,
I-
there's somebody that got kicked out of the meeting.
Say it again.
There's somebody that got kicked out of the meeting.
So your sell down is your hedge,
Yeah.
but not a hedge at the bottom of the stop loss?
So if you sell it down, you won't need a stop loss. If you take a sell position and you sell this down to your anticipated entry, you don't need a stop loss because your sell position will be open. You just have your a buy limit set right here, and you buy it. It'll buy automatically, and eventually it'll turn around and start pushing up, and then you can kill this sell position.
Thank you. That's what you call the natural hedge? Is that what that is?
Yeah.
Wait, Todd, can you do that? Say that again.
Okay. If you're going to take this trade, right, and let's look at it on the weekly order block, you anticipate price pushing down into your buy area and going up. So if you're going to take this weekly trade for a buy, the best thing you can do as a trader is sell it down first. So, I think this is going to go hit this order block and turn around and start selling. So you hop in for the sell. You're selling it on the way down. You have a buy limit set at the area that we talked about. And once price goes down and taps this area, it's eventually going to turn around. You don't need a stop loss for your buy limit. Your stop loss for your buy limit is this sell position that's going down. You're in profit in the sell position.
There you go.
So it taps your buy position. Your buy position can go negative. Your sell position is gaining profit. Eventually, it's going to turn around and start going up. Once it goes past your line, you can cut off your sell position that you had coming down, and you're in profit in the buy position. Does that make sense?
Yeah, got it. Thanks.
Now, that's a natural hedge, but what I really would like to see, I like to see the weekly order block going this direction. And then I want to see on a daily chart, a bearish daily order block. This isn't quite that setup. But it's still a situation where we kind of anticipate what's going on.
Because you got a daily order block so close?
Well, no, it doesn't have anything to do with the daily order block, in my opinion. It has everything to do with the context clues. It's kind of like if you can infer, right? You can infer the price is going up. And here's your first confirmation. You got the run up, the break of structure. Price comes back to the order block that sponsored that break of structure. Then it goes up. You get your reaction. So as confluence, you have a weekly order block that price is going to continue to push up. Where can we trade this to? Eventually, we can trade it way up here, right? Oh, damn, I already have that. Darn it. Price already broke this structure, so we can anticipate that it's gonna come way back up here. Now, how many weeks is it gonna take? The first time it took 1, 2, 3, 4, 5, 6, 7 weeks for price to come up here. But that's not the point. The point is, you can anticipate that price is gonna at least push to this level, right? You got the break of structure. We expect price to push back down into the order block. This is our imbalance. Once it taps us in, you know, it'll push up here eventually.
Hey,
Right?
Todd,
Yes, sir.
on your sell position down,
Uh-huh.
at what point are you cutting that completely off? Are you waiting for an order block? Or are you just waiting for the buy limit to kick in? What are you waiting on?
No, I mean, that's a individual, that's an individual thing.
I know, but I'm asking you. What
Well,
are you
if I were taking this trade, which I'm not, but if I was taking this trade, I would cut it off as soon as my buy position got in profit, I would just cut it off completely. Right? And here's the thought process behind it. Let's say, how many pips is this? And let's just pretend we're trading 0.10, $1 per pip. So you're gonna be up $100 by the time it gets to your entry. So if this pushes down, I mean, you got 100 pips that this can push down, you'll be up $200, right? Your entry here might be $100 in the red, but this sell position would be $200 in the green. So you're still up $100. Then as it turns around and goes up, once it hits your entry line, you'll be up $100 in your sell position, and your buy position will be at 0. And then you can just cut it off. You're still up $100. So if it pushes back down, it's just eating into the $100 profit. But you know that this is going up, unless there's some real world event that happens that causes price to tank, the Australian dollar to tank, right?
You're not taking it because you see better setups?
Yeah. I mean, I do. Like UJ. I mean, if you want to trade this, that's cool. I mean, it's a great setup, I mean, but you just kind of have to choose what you're trading. You don't want to be in everything, and you can make your money in one particular setup. So if you want to trade this one, it's a great setup. I personally think that I can get more than 147 pips. This took a week to go 147 pips. And that might be the greed in me talking, but I think that I'll get more than 147 pips with UJ. So I prefer to trade UJ or a USD pair because I think it's more volatile. Okay. Which brings us to this next beautiful pair, Look, y'all, we've been following this joker right here. These setups are beautiful. So you see all these lows, we're getting higher lows, you're getting higher lows. You want your wig to be snatched back, but if you anticipate it, then it'll be snatched forward, Okay. If you've been trading USD CAD, it's lined up perfectly. Impulse move, pull back, impulse move, pull back, impulse move, pull back, impulse move, it pulled back. We just talked about US oil, right? And we saw the bearish order block on US oil. Canadian economy equals oil, right? So if the price of oil is dropping, right? And really, instead of using US oil, we should use Brent, right? UK oil, right? Because that's Brent is really the oil measurement, but it's the same thing. You got a bearish order block on oil. You got a bullish order block on USD CAD, because I told y'all we should anticipate the dollar heating up. So I think this setup is a good looking setup. And I think we'll be able to trade this setup, you know, at least to these wicks, but beyond the wicks, because the dollar's going to be boiling. You know what I'm saying? It's hot. The dollar's hot. And everybody understands that the interest rates will likely be raised. And they'll probably be raised another ridiculous amount. If you look at the daily, you got this daily order block that broke the structure. There's still a lot of imbalance in here. Price didn't tap in. So I have price coming down to this green line before it pushes up. Again, this is a doji, right? This blue box is where the body of that doji, right? If you look at this imbalance here, this is within the wick. Price is going to push down to this area here, touch, turn around and go. That's my anticipation. So I would long this thing. If you want to be super conservative, you got about 30 pips stop loss. And we can chase glory and greatness. That's a 6.6 trade, 203 pips. Enough to make your weekly salary, ladies and gentlemen. And you can sell it down. I would wait for it to pull back first. But if you wanted to, you can find a sell down into your trade again. I think you guys are getting more comfortable, you know, buying or selling into your weekly trades. And I think that's only going to help you, you know, when you go forward, because you have your areas marked. Set your alert, you know, that way you don't have to worry about whether the trade is in your area, but set your alert to where you want to buy this trade if you're taking this USD CAD trade. Any questions? Autumn questions. I don't necessarily care for this USD chef. I mean, it's technically a weekly order block, so I expect it to push down and push up, but In my opinion, there are more clean setups than USD Chef. But it's a USD pair. You can expect for it to push up too. I would maybe it'll eat into this imbalance a little bit more before it falls and goes back up. But yeah, I'm not trading this pair. If you are trading this pair, I would drop down. All right, first thing I see is just this Wyckoff playing out on this 2-hour chart. All right, just based off this Wyckoff right here, this accumulation, I would think the price is going to come either tap this imbalance or go into the order block that sponsored this break. Pips of Persia got us right, yo. This trade is probably going to eventually end up way up here. You heard it here first. Get your money. All right, USDJPY. It showed a lot of exhaustion. But, you know, we still got this little weekly order block. You know, with the jobs numbers that came out and, you know, the anticipation that we're going to raise the interest rates, I really do feel that we're going to get the run up that we so desperately deserve here. All right, so $70 seems like a long way. You got this bearish order block on a 2-hour. So I'm gonna sell this as far down as it's gonna sell. I don't think that it'll get lower than this block right here. I think we can look for a double bottomish. Right around this level, and then we'll get our springboard up. And where's Alicia when I need her? Because this is when her trend line will be helpful. So this is the level that I'm anticipating. I don't, you know, it's not immediately clear where the turnaround would be, but 135.50-ish is the area that I'm looking for it to sell to, and then I think we'll head to the upside. I've heard projections at 145. I've heard projections at 141. That's a lot of pips still, you know, whatever one of those it eventually goes to. So we can just keep trading this up, you know, until it gets, you know, to these areas. There's 141. I think I have it going to. Obviously, it's not going to get there next week, but we can keep trading this to the upside.
Hey, Ty, where's the next breaker structure to the left?
It ain't
Is
there. No. It ain't there. It ain't now.
Like 20,000 feet down, you know?
It was right here back in September 02. But we well past these highs. That's probably why that dude got assassinated in Japan. Y'all hear about that?
Mm-mm.
Oh man, yeah, the ex-president got shot. They assassinated that junk.
That's exactly why he got shot.
Whenever you start hearing about gun violence in a kung fu state, you know we're in trouble.
All right, Donald Trump Jr.
The kung flu. That dude is a racist, man. But you know, whenever I read it, I was kind of shocked because when we was kids, when we used to watch the Kung Fu theater.
Yeah, I mean,
Yeah, I would have I wouldn't have been shocked if they had said he got kung fu to death, but when he got shot, I like, what, they shoot over there?
very racist, man. Very racist.
No, I would, you know, like I would expect somebody to come up, like the triad to come up and take him out. Hey, your policy stop. You know, your mouth still moving. Oh my God.
So like the bigotry, man, the bigotry.
Anybody have any other pairs on with that?
Euro NZD.
Oh, we don't look at that weak trash. Let me see.
Really?
How you come with these off the wall pairs, man?
Well, so here's the fun part. I had a long-term like play on EN already marked up. And then my husband was like, hey, let's look at EN. And I was like, oh my gosh, I already have it. So interested in your thoughts.
Was this your long-term play?
No.
If it wasn't, deleted. No, I'm joking.
It wasn't. So there's
I
that.
a long time ago.
Oh my God.
I don't have the date on here.
I'm interested to see this thing play out too. Are you selling Euro NZD?
Oh yeah. It might be similar to yours. It's at least the same direction.
Yeah, it's concerning if you're not selling.
No, it's just I am selling it. So that's good news. And it came up to the 78%.
Mm-hmm.
Yeah,
This is what you was talking about?
quite possibly. Let's see. Well, right now I'm looking at my 12-hour chart. I have to go to the weekly. Let me see.
This came right to my line too. I didn't take this trade, but I had this marked up a while back. I didn't set my alert.
Yeah, same.
And I
So-
didn't see it until after this week. I saw it last week.
But isn't this an opportunity to get in on this bearish OB?
Heck yeah. And the pip count is 5.
Yeah, it's like a 800, 1,000 or something crazy like that.
Well, yeah, but you know the Euro NCD, the pips count like the Euro AUD. You make more money.
Oh, you know how I feel about EA.
Well, this is like EA.
Uh-oh.
You know the AUD and the NZD are cousins.
Yeah,
They
that makes sense. Australia and New Zealand.
Yeah, they share everything. Even the World Cup. But yeah, this is a great play, as a matter of fact. I might take this one. I might look at it.
You're welcome.
Yeah, I mean, thank you. But the euro is in all kinds of trouble, yo. Hey, Elfie. Elfie should be talking about this. Like, she should be screaming out to the top of the lungs. We got people over there in Berlin, and they not telling us what's up. Is Elfie still on the call, or she got off? Man, Elfie left too, yo.
Once you started making fun of the Japanese, she got disgusted.
Shut up, fool. Elfie ain't Japanese.
I know she's not, but she was disgusted by your bigotry.
What? Because I said they shot. I mean, I thought they was gonna kung fu. Yeah.
Kung fu jokes and all that kind of stuff.
Let me see if I can text Elfie.
She told me she was out.
You said what? Shut up, dude.
Told me she was out. He was like, I'm out.
So basically the euro is the economy is showing crack. So I don't know that they can raise their interest rates too much more.
What are the DAX? What is the DAX doing?
I don't know, but let's talk about the Australian dollar there, homie.
Yeah.
Or the New Zealand dollar.
It's planning to follow through the deal anyway.
New Zealand is sitting at 2% interest. There's a positive outlook on their economy. Their cousin Australia just raised their interest rate. Germany ain't even on the map. Look at their interest rates. 0. They like Japan. They ain't raised their rates yet. Not looking good. Got a war in their backyard. So I do expect the euro to be in the tank with the rest of the feces. So this is a great trade setup. Tell your husband you can pay back all the money you've been losing.
All of it. This week.
Hey, hold on, Kay. I think I gotta tell you. Don't just hop in trade Sunday and say sell max lot size.
No, I like limits. I've updated my trading plan. So I have to use
okay.
limits and hedge positions as my stop losses. Like all of it's coming together.
Okay. I'm glad to hear it. You know, because one time me and you had a conversation about EA. And I guess you just hopped there for the sale. I'm like, wait, man, you gotta wait.
No, I got tapped in, which was what made it worse.
Hey, that reminds me of Sean. Sean does the same thing, but he used to. How Sean?
Lessons are hard learned, man.
Sean knows all about that early entry into the Dow Jones. When we talk about it.
Anticipate a lot earlier, yeah.
You say you what?
So I was saying you shouldn't anticipate earlier.
Well, I mean, there's a difference between anticipating and hopping in the trade. You know, you anticipate, like I anticipate this thing to push back up, got this break instruction. That don't mean I would just hop in the trade for the buy. I needed to actually start buying, you know, that I can find me an entry. And then I enter my sell position for the way down. But the more I look at this setup, man, the more attractive it becomes. You know, in your analogy, Sean, at least she's big and cute. This setup is big and cute, you know.
Not big and fucked up.
Language, sir, language.
It's tapping into a, what is that? Is that a weekly order block right there?
Up here?
No, they're at the end of the red candle.
This right here? Oh, yeah.
Yeah, it's a daily one there too, so it should.
Oh yeah, it's going up. But I mean, look at this pip count, yeah. This is what this is why King even brought this up. Okay.
Absolutely.
Absolutely.
Buying that on Sunday, I'm buying that.
Hey, King is greedy, yeah. I know you are, Sean. This is
I know I'm a pig.
Hey, you know, yeah.
Todd don't like that. Don't do that with the pig.
Hey. Bears get paid, bulls get paid. Pigs get led to the slaughter.
As soon as the market open on Sunday, I'm just buying.
I know. That's because you're a pig.
Sean ain't taking no spread, no nothing. He just gonna execute.
That's like, let's get led to the slaughter. So, I had to drop down to my 2-hour so I can see a possible entry for this joint.
Republican politicians in the United States have been cheering him on. There have been many around the world.
Let me see what you say. Let me see what you say.
Well,
Go ahead.
I can't help but notice all this imbalance up here. You know, this is where the price is gonna come, huh, Terrence? Every time we say it's gonna come to the order block, it can go way up into the wick.
Where you think it's gonna entry at the bottom?
Break. You said where am I gonna enter at the bottom?
Mm-hmm.
Oh, I don't really care about that. Here's what I think. I need to see a break of structure, you know. So really I would want to see price push up past this area, then come back. It looks like a little Wyckoff is playing out on the lower time frame.
Already had a break of structure on.
I agree, but I'm just saying it looks like a little Wyckoff is playing out right here. Let me keep dropping down.
Hey, the 4 hour is already tapped into an order block for the buy.
So this was the break right here.
Let's go to the next hour right now.
It ain't gonna buy right now, though, Terrence.
A major abortion is underway.
There's an imbalance that it's gonna have to come fill.
It's probably gonna feel that first before it starts buying.
That's probably still in that 4-hour order block though.
It's imbalance.
Mark it up. Mark it up and check the 4-hour.
Yes, sir. It might come all the way down to this order block.
Bada boom.
Find new answers, find new roads, Chevrolet.
Well, both of them are in there.
Yeah, they are.
Don't sound so depressed.
Well, you know, you still got 6 months to get in the trade. So if you want to buy it.
You got 6 months. This Ian doesn't play, man. $30-minute order block. I think this is probably it. All right around a good area. What did you get, Kim? I know you got something different.
I think I got about, oh, you're on the 30 minute. I feel like it's gonna go below that right there a little bit.
So what price?
Oh, I'm on the 15-minute. I got the 64, either between 195 and 224. 64, 195 or 224.
Right there.
One of those two.
Damn, how you come up with that?
She just made it up. So
I did.
there's a how'd you come up with it? I like this order block too. It's attractive based off of this lower low. There's a breaker structure right here.
Mm-hmm.
And then there's a lower low. So this order block is attractive. I can't lie about that. And we'll see. But
Wait, where's the breaker structure, Todd?
right here, price pushed up past this right here. Breaker structure.
Oh, okay.
Now the price pulled back. It dealt with the imbalance, but it didn't touch the order block. It failed to make a higher high here, which means it wants to go lower.
Mm-hmm.
Man.
So this order block is attractive. It probably will hit that order block. I don't really, I guess this is all nuance, right? Because this is a hedge trade, I don't necessarily have to catch it perfectly to go up. But the real money is going to be made when it drops. So, if there's an imbalance here at this green line, and I'll just move this to this order block as possible entries. I don't know, what price will do or where to go, but you have a bearish 15-minute order block. It's going to push down to one of these levels. Don't be Kenya, are you on the call?
Yeah, I'm here.
I mean, it's only like a 25 pip difference basically from this line to this other area of emphasis. So, but don't jump in with a heavy lot size at this line because the price bounces. And then if it doesn't break this high after it bounces, it's probably going to go lower.
Hey, Todd, can you explain the break of structure based on the order blocks? Is that wick classified as a break?
Where?
We've been talking about this on the call for a little while.
Is what wick?
The last wick on the 15 minutes.
Alicia laughing.
Oh, this right here?
Yeah, it's pushed up higher than both of those order blocks right there. Both of those bullish order blocks on the 15-minute.
This
So-
ain't bullish, this is bearish.
I meant bearish. So is that a break?
That it violated this order block. But it's a moot point because there's an order block right here.
Gotcha.
When your order blocks are stacked, you're going to get that a lot of times. This one be violated, to tap right back in and push down. But the key thing to me is you have a high, a lower high. Price wicked. It tried to break, but it couldn't. So it has to go lower. And when you look for places that have liquidity, it's right here, right? Beneath these lows, there's an order block. So I think it probably will tap into that order block. And maybe try to push higher. If it just closes this imbalance and pushes back up, what I'm saying is don't just jump in like, oh, it's going to buy. Because if it doesn't break this high, it's just going to push back down to the order block.
Terrence is questioning my trading plan.
Hey, I'm just trying to make sure I got understanding over here, Kim.
That is hilarious.
So that ain't a break for her, Todd. So just so you know,
It's not a break for me.
Hey man, she has all kinds of weird rules. As long as it works, if you can make money being weird, that's cool. Hey, Steve Urkel made a whole bunch of money being weird. and now in his 50s, he can't break being Steve Urkel. He's still he's still gonna be Steve Urkel instead of Jaleel White. Guys. That's how Kim is. She's just weird, her
Whatever.
It doesn't break structure, but as long as she's making money, that's all good. Kim said she's getting her live account this week, yo.
I might next week.
No.
I might do this week.
No.
I might do this week.
Just do it now. Just do it now.
Okay.
No
okay.
time like the present, Kim. Just go ahead and get it.
Okay, I'm doing it.
Yeah,
I'm scared, y'all. I ain't gonna lie. I struck out 3 times. I'm scared.
3.
I'm doing it. I'm
Man,
doing
I
it.
struck out 3 times the first week.
I was gonna say, Terrence, you good.
If that's the standard, nobody would have an account. Hey, 3. 3. Oh man, we ain't gonna even talk about how many times I struck out.
But I struck out 3 times since February. That's enough for me.
Since February. That's not even. You're not even considered a real trader if you struck out 3 times. As Aaron, it's 3 times. I've struck out twice on Monday, and then 3 times on Wednesday. You know what I'm saying?
Oh man.
Yeah, man. When I was trying to learn. It's not good to be hyper aggressive or you trade off your emotions, but that's just how it was. And then I pulled a Kenya 1,000 times where you think a trade is going a certain way, you load up and it doesn't, it pushes you out the trade, and then you look at it a day or 2 later and it's going your direction. Well, that'll have you piping hot, boy. Blood pressure on boil. But it's also a valuable lesson. Like most of the time, as a trader, you see the setups, you see them happening. And the problem is you're not patient enough to wait for it to actually happen. You jump in and over leverage before the actual move. And the market makers know you're going to jump in because they entice you to jump in. And then they take you out and then they move the market to where it's supposed to go. So all you have to do is either hop in and be ultra conservative, then be patient enough to wait for the move to develop. You can always add entries. You can add positions on the way down or whatever, right? But be conservative first, then ramp up your lot size or whatever, then make your money. Just think how we traded GJ this week, the moves were right there. It happened right in front of our faces. We anticipated where price could go. I mean, I didn't know that the prime minister was going to resign, but you know, we knew if price broke that order block, it was going to get a higher one, right? And it went right up there. So, you know, those types of things and those types of situations kind of work out, you know, in our favor. We just have to be patient enough to allow the move to develop.
Hey, Todd,
Yes, sir.
I think that second 15-minute OB that y'all looking at is at the top of the daily OB. From
This one here.
Yeah, the lower 15-minute OB.
Yeah, this is it right here.
I'm looking at my screen. I can't see. I think.
Oh, you mean right here?
Yeah.
Yep.
All right, now back to Tokyo and Hancock.
I know we don't frame the pairs no more, but you know.
Well, no, I mean, you should. I mean, only reason I don't do it is because that's the beginner, you know, like you can still do that. Like all of that works. But you know, as you grow as a trader, I mean, you kind of understand that piece of it already. Maybe you need to highlight your breaks of structure, or maybe you need to highlight whatever you need to highlight as a trader. That's what, in my opinion, those are the things that you should kind of put on your chart. Things that you may not see naturally that you need to pay attention to. When you think about this break of structure happened in March, man. And look how long it took price to push way back up here.
They say that they were iron pipes as the barrels.
That was a long time that it took price to push way back up. March to July.
Hey, Todd. So most of the big, well, I can't say most of the big, but ITC, does he wait? You said some people only take it when it gets to the 78.6.
Yeah.
It seems like it take a while, but if you catch it.
It doesn't, listen, it takes a while, but if you go through and you mark these moves up, so you knew that this was a break of structure way back in March, right? So
right.
If you would fib this move in March, it's not like you're not trading anything else. If you would fib this move in March, then what date is this? July 1st. I mean, this was right here. I mean, you can't make this up, man.
Hey, so on a 78.6, you don't need an order block for that, or you do?
No, I mean, it's an area, but I mean, you would find an order block. It's an order block right here, but it's the area you're interested in, the area, and then you'll find the structure. But yeah, if you drop down, I guarantee you this is an order block. You see that wick?
Yeah.
There's an order block.
On Friday, that Shinzo Abe was attacked. All right, follow Hancock.
You see it? Let me check the 4 hour.
All right, Patagonia, remote, harsh.
Right there. You see it?
Untouched places on Earth. Now the news in an original series.
Yep.
The world takes viewers on an emotional, breathtaking
Brad.
places and animals that you simply won't see.
Yeah, I mean, these moves are always, they happen every day. It's just that you don't follow these pairs, or you haven't marked up your charts, you know, in advance. And you know, Sean jokes about the paint drying. Now maybe he ain't joking, but the point is, you don't have to wait on these. I mean, we always have something to trade. Every week we have a pair that we focus on, but we can still go through and mark your charts. You know what I'm saying? Like, you on the weekly chart, you see that there was a break of structure, and you anticipated that price was going to push up into this area. That's why this area was highlighted. The wick came right up to the box. no excuse why I didn't hit the trade other than I didn't have my alert set, right?
Or maybe we should take some time or maybe I should take some time and go and mark all the weekly breaks of structure or something.
Well, yeah, if you want to trade like that, you can do it on a daily, you can do it on a weekly, 4 hour, 6 hour.
Oh, I definitely want to trade like this. I don't want to miss these 78.6 all my life.
Yeah, I think that that this is the way to do it, you know. And yeah, I believe that the goal for the group was always to have a group of people who can see the market. You know, we at least see it similarly. Your markings and your price points don't have to be exact. You know, like you need a Kim in the group. You need an Alicia, somebody that an abstract thinker. You know, in so to speak. They don't see the thing. They don't see eye to eye on every trade. But when you have that type of group and people are going through and finding setups, like maybe somebody will take the weekly chart, maybe somebody will take the dailies, you know, maybe somebody will take the 4 hour. If you guys have a group and you meet at 5 o'clock every day, I mean, that could be somebody's job could be to take these 4 pair and find the weekly breaks or find the daily breaks or whatever. And you can eat the market up just off those moves. And you don't necessarily have to wait for your daily order block. Like if you think about it, the daily order block was the start. That was the basic level. That was an entry level way to find trade setups, you know. But as you grow in your understanding and you advance as a trader, there are so many other ways that you can catch the move faster, right? And you have more confluences that will align you in the right direction for the trade. So, I mean, if that's something that y'all want to do, y'all should do that. Like, just divvy it up. Boom, boom. You take this, you take this, you take this. And that could be in addition to finding the order blocks at the end of the day at the 5 o'clock. Like in that meeting, if there's something in particular that you see, you can just drop it in that meeting and everybody can put the alert on their chart. And that way everybody is on the same music. I mean, on the same page. So if the higher time frames are going to be easier to see because it's less noise, right? The lower time frames will be harder to see because it's more noise is going on, right? Just be careful with the lower the time frames you go.
So what you're saying is, what time frame we don't need to go past?
Well, listen, I'm not going to say don't go past it, but
maybe we'll save that for a later time.
Yeah, you're going to get fooled more on the 15-minute. You know, you'll think the price is coming to your area, and you'll prepare to enter that trade at the 78.6, and the price will blow right past it and keep going that direction.
So can you be on the 1 minute with it? So
you said, can you be on the 1 minute? Well, listen, if she's good at it, then that's cool. But
I'm a little fast and loose.
She just threw you under the bus, Kenya. You know.
No, that was no.
Okay.
That was just throwing under the bus.
No,
here's the example. I mean, you can look at this trade setup right here. Here's the example. If you had traded this.
Look, I'm laughing because when we on the 1 minute, we be like, it's tied on the call.
Right, we be like, oh, Big Brother watch.
Hey Todd.
Yeah.
Hey, something else about that E8 versus the other funded accounts. If I'm not mistaken, E8 you can have to close at the end of the week, right?
Well, yeah, that's true, but it's a double-edged sword. It can gap your direction or it can gap the opposite direction. So here's what I would say. me personally, if I'm holding a trade over the weekend, I really want to hold it in my personal account because I can always recover. If you hold it in a funded account, like you aren't like I guess you don't have a funded account, so it doesn't matter. But if you're making money the way you're trading now, closing out every Friday, why would you switch it up in the hopes that you don't have to close out a trade? You can always find a re-entry. Does that make sense?
Yeah, that makes sense.
So
But I was just thinking on the 78.6, it's less work and you don't got to get worried about caught up in the retracement.
Well, that's true, but you got to trust your analysis. You know what I'm saying? Like that's the problem with the 78.6. If you don't trust your analysis, it'll never work. I mean, just think you're going to enter a trade that's pushing against the grade. Like you're going to enter a trade going against the direction that it's pushing. So this is an uptrend clear as day on the weekly chart. And you're going to enter a trade for a sale just because it's hitting your 78.6. It's going to take some intestinal fortitude to do that. So, you know, right now it's cool.
On the Dow Jones all the time.
Well, I know, but what I'm saying is it's going to take a while to get there. It's a mental adjustment. It's not just something you can do. It's easy to say that when we're looking at the chart in the aftermath, but in real time, it's not as easy to pull the trigger.
The really, you're gonna have to use stops or hedges, you know, and because the stop is what protects you. I mean, if it keeps on running through your 78.6, you know, into like 130 or whatever, you know, if you got to stop somewhere. So if it keeps running, you know, the damage is minimal. Or a hedge, if you know, really believe, you know, I don't hedge mine. When I do it, I put stops, but you got to have some backside protection is what it boils down to.
Kenya, are you listening? Because you know, I don't know if Kenya uses stops.
Yeah, I do now. It's part of my trading plan that's been updated.
Okay.
But the other thing that I found, you know, is sometimes that 78.6 is within striking distance of a liquidity pool. It's probably going to run to the liquidity through your 78.6. So what I do when they're, you know, relatively close, I just put my entry in the liquidity pool. And if it for some reason stops shorter to 78.6 and turn around, I just didn't get into it. But I've been, you know, ran through as it's running to liquidity too many times. So if liquidity is relatively close, you know, I put my entry in the liquidity.
I agree. And you know, liquidity is always going to be the key. It's not just going to 78.6. It's going to be some structure or something there.
Right.
Order block imbalance, equal highs, equal lows, something is going to be there that causes the market to stop there.
From the January 6th.
Anybody got any questions? All right, good folks.
So Ty, you rolling with EJ this week? I mean, UJ this week?
I'm definitely trading UJ. I'm probably going to trade that EN too. But this is Kenya's trade, y'all.
Thanks, Kenya.
Hey, I'm feeling like a winner. I got the Todd stamp.
This is the one, no, Kenyon, this, I'm saying, but this is the EA trade that you let run out the door. Now, remember we talked about this trade? I said, man, it's gonna turn around, it's gonna sell, right? And you hopped in there and you got in that wicker.
I got tapped in.
Yeah, it just wicked up. But since then, it sold 447 pips, man.
Yeah, that's all my money right there. You looking at it.
So yeah, this is the exact same thing that EN is doing. Exact same.
Mhm.
And this box, we had it marked up. The frustration. So it's not enough to know that that the trade is happening. You gotta execute the trade. What
This
a-
was like 4 weeks ago, so I feel wiser now. I've watched ITC since then.
Hey, I don't think it was 4 weeks ago. I think it was 2 weeks ago.
Well, I mean, 2 weeks, 4 weeks.
Oh my God. Yeah, I mean, trust me, I know I've been cooked plenty of times, the same way, which is why I always wait for the move. What I found is, even if you miss the initial move, if you miss this initial tap, it's always going to come back. This tap was even better than this. So, the patient trader really does get paid. And in these cases, when you trade in these AUD and the NZD pair, you get paid a lot. So, if you're not trading UJ with me, trade one of these, EA, EN. It's the same setup. It's just the exact same setup. You can hedge it on the way up and then sell it.
So you do realize EA got most people on the call wanting to quit trading, right?
Well, why? I mean, it gave out. You saw all the pips it gave out. Why would anybody not want to trade that? It's going to buy back up. There's an imbalance up here. I don't know if it'll buy all the way up there. There's definitely imbalance here. I can't believe y'all. Why y'all don't like EA? It only hurt Kenya, didn't it?
Hey, there's a prime example right there. Look at that last weekly bear OB. And it blew through it. That's why. Look at the bear bull one a couple of weeks before. Look what happened.
Where are you talking about?
I'm talking about that one. You
this one?
Yeah.
But it has a super long wick though, so it didn't really like blow past it.
But let's talk about this, because this is what makes me cringe, whenever we start talking about order blocks on their own. So I've talked about this pair. This is my marking right here. The market had pushed down because of the war. Remember, we talked about why the market pushed all the way down here. The war.
Correct.
We expected the market to push up into our zone. We expected this. The market pushed into the zone once. Pull back down. Pushed into the zone a good time, like it pushed into the zone, like the bodies of the candles pushed into the zone. And now it pushed away. This right here is a swing low. So you got a low, lower low, higher low. So whenever I remember talking about having this swing low saying that the price would push back up into the zone. So the structure alone on this chart should have prevented anybody from taking that sale right here.
That's
And
true.
if you have your moving averages, I guarantee you this price came to the moving average before it pushed up. So I just think that that understanding and recognizing order blocks are cool, but looking at structure and understanding the move is better, you know.
Hey, Tyler, why you pick that for the third leg of the swing low instead of the other?
Oh, right here.
Yes, that one.
Well, I mean, either of them are fine. That could be it.
I was just curious. I was just making sure I wasn't missing something.
No, I mean, either of them are cool.
I mean, the bottom of that long one now. I'm not talking about the little short one.
But this right here.
Yeah.
Well, because it's a wick. I was going by the bodies, but I mean, it doesn't matter. The point is, like on a daily, if it went down to the daily, it probably would. The swing low would probably be here, here, and here.
Gotcha.
But this is a weekly chart, so I was just trying to find a body. But I mean, my point was that because it's protected, you would expect the price to push up into the zone. I mean, everything's set up to where this price was going to push up into the zone, and it did. And once I remember it was approaching this before we got this week's candle. I remember talking to Kenya and them on the call about this selling. Like, you know, my thought process was that it was going to sell. I think, as a matter of fact, they probably disagreed with me. You know, well, everybody except for Kenya, because she took the trade. And she jumped in too early. But, you know, my thought process on that was it had to push up into the zone before it sold. And it did. But, you know, it didn't do it immediately. So, you know, it still followed, you know, what we thought would happen. It just didn't do it that day or whatever.
Nah, you're right. And maybe that's it. I think, you know, February and March, for the most part, we were trading just order blocks without as much other detail.
Right. It's just evolution. You know, like as you evolve as a trader, your understanding is going to grow. And you know, like now it's sure taking time to look at IT or ICT stuff. Your eyes are going to open up to a different level, you know, and you'll see a lot more things happening on the chart. And the concepts are blended, you know, like they all add up together. But this day, you know, like I'm always asked about the order blocks. So this day, whenever everybody looked at the chart, how come nobody sold EA on the 5 o'clock call? That was July 1st. Did anybody say sell EA? You know, and I asked the question because on the daily chart, you get this wick that wicked above these highs.
What was your question, Todd? I'm sorry, I missed it.
So did anybody say on July 1st, when you had a 5 o'clock meeting, to sell EA? Now, I don't remember what day I was on that call, but I said that this was going to sell. But I know I wasn't on the call that day that this wick. But when you see this wick, right, and they ran the highs, you know, ICT would tell you that it's going to sell. Now, we don't really need ICT to tell us that it's going to sell because we kind of understood that it was a down move and it pushed up into the zone. But this is just confirmation that that daily wick. Oh, we didn't have a call Friday. Okay, cool, Kenny. But that wick told the story. Like it told us everything that we needed to know. A wick on the daily means the market is going to collapse and it's going to cascade down to the bottom. So now we're going to run all these lows. We ran all the highs, all the liquidity is sucked out. Now we're going to run all the lows. And that's exactly what's going to happen. These lows will get ran. They'll get rent. So, you know, with confidence, you can go ahead and set us down. And here's the deal. We missed the initial move. Wait for the pullback. Get in.
Hey, Todd.
Yes, sir.
So even with, and I know you keep saying don't just look at the order blocks, but so you would classify that on that Friday, that still would be a bullish order block, right?
What would be a bullish order block?
That green doji and the green, right where you had.
Yeah, definitely. It was a bullish order block into the zone. So ran the highs. Now, the novice trader would have said it's a bullish order block. We'd sell it down and buy it up, right?
Possibly, or just, yeah, definitely.
Right, because you have no understanding of that it was just a retracement. Like you have to put everything together. The seasoned trader that you are now, you know that this was a push down, there's a retracement into the zone, and you're expecting to sell. This was the area, I mean, we identified this area a long time ago, like a long time ago. This was our area. So when price got there, I mean, you can see it rejected a few times. Then the telltale sign was the stop run high that on that daily candle. So you knew it was going to be a cascading effect.
Gotcha.
Like I've shared a podcast where a guy talked about that, the ICT video. He's like, that's the only thing you really need to know. All you got to do is look at the daily candles for these stop runs and you can get paid after that.
No order block, no order block, don't matter.
No, it's not going to be an order block. It's only ever going to be a wick. It'll never be an order block on the daily, but you'll see the wick run. It'll either run past the highs or the lows on the daily candle, on the daily chart. Once you see that, it'll just be a cascade effect to the opposite direction. We've caught about 4 of those trades.
Gotcha.
Who looking for stop run? So listen, that is a good question. I remember Aaron used to check that, you know, before he stopped trading. You know.
Felicia, you got all these pips.
I said we.
But yeah, do y'all remember? Do you remember trading this in February, Felicia? A stop run?
I have no idea, but I do remember Aaron.
You don't have any idea, for real?
I don't. Not a clue.
Listen,
I can't tell you what I did yesterday.
Hold on. It was USD CAD and NZD USD. Y'all don't remember that?
I feel like I remember USD CAD.
Who, AT caught it?
No, we caught it in the group. I want to say it was February. No, it wasn't February. It would have had to be right here, April. But here's what I would tell you. See how it's just a wick on the daily and it ran these lows?
Yep.
Now, this initial push-up would have gave you FOMO, right? But look what the pullback came to. $78.6. And then look at the rocket move that shot up after that. So would you have rather caught the initial move or just get on the rocket? Look at that rocket, man.
I can't, but
Huh?
how many pips was that time? Just curious.
Yeah, man, 1,000. I don't. It's a lot, man. But y'all know because we called this out. We were in this trade.
Hey, so why are we talking about 78.6?
So look, even after this rocket that broke this structure, price pulled back to the order block, guy. The third entry, and got another rocket. You can't make this up, man. You had 1, 2, 3 opportunities at the same trade that took you to the same spot.
Hey, Todd,
Yes, sir.
can you look at where you going?
Where who going?
Oh, I like trying to go somewhere. Can you go look at GJ?
Yeah, I'll look at GJ.
Only reason I
Yeah.
asked,
I was just showing you this is NU the same day. NZD USD. Swing high, wick past money train. Money train. Come on, y'all. I don't even want to talk about it now. I mean, you have to know this trade, Felicia. We call this trade. Selena know. I don't know where Selena is. Is she, looking at plantations again today or whatever? But this trade, this trade right here.
she probably had class with AT.
She is.
We
Tano.
we called this trade out, man. And I think most of us took the UC trade instead of the NU trade. But this day, April 5th, I've mentioned both of these trades on the call. And that's a lot of pips, man. That's a lot of pips. Man, 739 pips. You could still be in this thing for a sip. That's the bad part. You can still be holding that. But anyway, look at GJ. Now, Terrence, this is what I expect from Martha.
Nope, I'm only asking because it's approaching that 78.6, sir.
Let me see. My battery's running low.
But I guess with this, you don't have the structure break.
What 78.6 you referring to, sir? This 78.6?
No, maybe that.
Well, so let's talk about this. The market comes down, goes up.
Breaks.
Yep, came down, came up, failed to break, which means it's going lower. Came down, broke this low. It's probably going to push up to the 78.6 order block and then come down. That's what I would guess.
Gotcha.
Is that what you're guessing?
No, I don't know why I had it lower than that, but I must have measured it wrong.
And this is a weekly? Yeah. Bruh, it's still, I still say we sell. I still say it's a sell. The only reason that price even came back up is because your boy quit. I still say this is gonna sell.
Sell after it comes to the 78.6 or
yeah.
So it'll just be something to watch. Put the alert.
Yep. You know, it just, only reason I'm not trading this is because there are cleaner setups. You know what I'm saying?
Right. We're just waiting to the, well, I mean, you saying cleaner before it gets to 78.6 or?
Yeah. There are cleaner setups, period. EN, UJ, they're cleaner setups than this one,
Gotcha.
in my opinion. Now, if you just like GJ and you want to trade it, I mean, I would trade it up to that 78.6, and then I would look to sell it down. But you know, I like easy trades. I don't want trades that I have to guess, or you know, the pucker factor is high. You know what I'm saying?
Gotcha.
So Todd, we learned that EJ and GJ moved similarly. So does EN and GN move similarly? I know EN and EA does.
All things considered, they do in general, but it's so the British pound is moving differently based on the Boris Johnson resignation.
Right.
So they're not going to be lockstep here. But I just wanted to show y'all something real fast. You know, the market is fractal. You see this wick? That wick passes high. Y'all see that, right?
Yep.
That's your clue that the market is going to cascade in another direction. Right? It wick past the high on the weekly, not the daily, but still it's fractal. It's the same everywhere. You got your wick past. You got your explosive down move, like explosive diarrhea. It gave you those bunches of pips. Almost 1,000 pips. 874 pips. That's what you got from this down move. But for you FOMO fans, after this explosive diarrhea, it came back to pick you up at what? The 78.6. To take you down again. Y'all ain't paying attention, man. Y'all just here for the coffee and donuts.
Well, what time do you hand those out? Because I didn't get any.
Y'all ain't paying no attention, man. I'm trying to stuff your pockets, man. I'm trying to stuff your little pockets. Y'all ain't trying to get that, man. Y'all just here to hear brother speak, man. Picked you up, you in a little drawdown. It paid you again. Come on, y'all. Come on, y'all. Whew. Woo. Anyway, I gotta stop dropping these gems, man. I gotta stop dropping these Susan B. Anthony's, man.
Why would you stop, Todd?
No, I'm just saying, you know, I'm just thinking to myself, like 5 years from now, somebody gonna watch my YouTube channel like, man, this dude dropping these gems, man. Oh my God. This is for free. For you young traders out there watching this sometime in the future, I just want my credit. No joke. No joke. That's ICT, y'all. But I don't like 69. You are retarded. I know that's right. That 78.6 would change your life.
I'm telling you, y'all weren't on the call when it was just me, Sean, and Elfie. And that's when I told him I don't even subscribe to the Golden Zone anymore. Like, that's over. That's done.
You only do the 78.6? What?
I'm only on the 78 or better.
Yeah, you know, ICT only does the 78. But I mean, here's the deal. It all works, right?
No,
And-
I get it, but when you're in the 50%, you're kind of in between the zones, the top of the zone and the bottom of the zone. So
Let's-
you don't know which way it's gonna go.
Hold on, let's back up because I can't co-sign with all of that negativity about the 50.
Okay.
'Cause look, this is what there are times when you look at something and your zone
Mm-hmm.
is where the action is at.
But what's on the daily?
What's on the daily?
Mm-hmm. Is that your blue zone? Is that your blue zone?
That zone was, that's why I had that blue zone, because this is where I expected. But my point here is that's where the liquidity is, right? That's where
Mm-hmm.
imbalance took you. It is not enough to, like we get caught, we say 78.6 and we say the zone, right? But the liquidity is what dictates where the move is. Now, the liquidity normally rests either in the discounted zone, like from the 50 to the 60 or the 78.6.
Mm-hmm.
I mean, once you recognize the liquidity, the rest of the stuff will play itself out. It's kind of automatic, if you will. So don't just disregard the 78 points. I mean, the 61 point.
No, and I get that because I would see it as and I get what you're saying. And
Right.
because I see it as a retest of the break, like of the order block that was broken, it came back and retested that area and dropped back down. That's how I see it.
Right. But every time you get one of those explosive moves,
It's usually from the 78 or
well,
better.
it'll come back to get you at the 78.
Yeah.
Like I used to not understand that either. And you think, oh man, I missed this move. Let me jump in. Well, when you jump in, that market double back and go to that 78. Like,
right.
It's like, God, no, I'm in deep drawdown or deep doodle where you get pushed out the trade if you over leverage. But if you have an understanding that it's coming back to pick you up,
Mm-hmm.
then you can save yourself a little grief. 19 October to August. Like now when I see these dips and pullbacks, my appreciation for them are a lot better than they used to be. This dip that broke structure, this pullback, probably 78.6. Pushes down, gives you 2 additional entries before it breaks. And if you look at the bigger picture, that's just Wyckoff playing out on a higher time frame. This push down, this is a sign of weakness because it broke these lows. So you'd have known that from this push down to this pullback, 78.6 entry. Darn near on the money. From this top wick, push down, almost 78.6. You can't make this stuff up. It's almost it's almost cheating. But you just have to be patient and you have to set your alerts. And you have to be cool with watching paint dry, as Sean says. All right, good folks. The room is getting smaller and smaller. You guys have anything else? Did everybody feed their Forex hunger? Is everybody prepared for what trade setups they're going into the week with? Every week, we call out the right trades. So all we have to do now at this point is just execute those setups. We haven't had any losers yet. Setups have been panning out. All we gotta do is stay the course.
Todd, you post them on the,
No. I didn't post.
you're not going
I'm debating, like,
okay.
we all got the same 24 hours. All they had to do was show up for the call or watch the video.
Gotcha.
I mean, this is free. These are free gems getting passed out here. I can probably post the setups, but the stop losses will be huge using the weekly order blocks. Like a lot of people get turned off by that. But if they tuned into the analysis, they would have more of a pinpointed region, I believe. So yeah, I'll go ahead and post those few setups. You guys got anything else?
Money on 3. 1, 2, 3.
Money.
Money.
I mean, real quick.
Y'all ain't gonna be able to sleep tonight. Wait on that bar though.
So ain't.
Hey, soon as the market over, y'all buy it. Buy it. It's gonna drop another 150 points.
That's what we're doing for EN. We buying it immediately. Market open Sunday.
Spread at 6,005.
Put in our sale limit and just ride.
Yeah, see, they're not gonna understand. If I just put a sell right here, they're like, well, the price is down here, But I'll do it anyway. Anywho.
Like you said, if they was on the call, they would, I mean.
Have a greater appreciation, at least for the
You're just gonna lead them to water. Can't teach them to drink. So.
And bingo.
Maybe add a caption to the post that says, "Go watch the video."
All right, you guys. I am let me get off here, man.
Thanks, Todd. Thanks, everybody.
Yeah, thanks for showing up, guys. Time to go to IHOP.
Thank you all. Thank you guys. Appreciate you.
Ew.
Y'all don't like IHOP?
No.
Absolutely not. Waffle House all day.
Yeah, y'all probably like that dirty Waffle House. I know. You're a dirty Atlanta Waffle House user. Oh man.
Atlanta Waffle House.
Yeah. When I go to the Waffle House, man, I always just feel like I'm eating like in the alley or something.
You feel like looking over your shoulder.
Yeah, man.
Somebody gonna steal your food.
They the dirtiest joints, like, man.
And yet I've never gotten sick from eating at a Waffle House.
Oh, you got
sick from eating at IHOP?
I don't like IHOP because it smells like bleach. So yeah, they're clean, but you smell it.
And on that note, I'm exiting the call. Is that not this whole conversation?
Oh my God. Hey, like the Waffle House, they haven't ever cleaned up. It's dirt and grunge. Oh man.
It makes the food taste better.
Bruh, I know I'm
I cannot believe. Hey, even the workers are dirty in the Waffle House. They all greasy.
That's mean, Todd. Oh my
I'm just saying, man. Like, last time I ate at Waffle House, I was in Atlanta. I was like, no, I can't do it. I can't do it no more.
Well, leave it to us.
Todd, you know you still recording.
Oh, okay. Hey, if you're a Waffle House worker,
we're sorry. It was not shame.
I apologize. I've just never eaten it,